We're running home stretch. Welcome back. We still have Bayo Durodola here with us, and he's been talking to us about the economy as a whole. Thank you, Bayo, for still being a part of the program. Now, before we went to break, I was talking about our ability to diversify our economy in order to shift attention away from oil and the challenges that actually go with producing and generating revenues. But in all, are we doing enough? I was asking before we went on break that, are we doing enough in this regard to diversify the economy?
I'm sure the government is doing a lot. The size compared to where we are right now is the controversial issue, and perhaps Nigerians just need to be a little bit patient. And a lot of our complaints and issues we raise are valid. I'm sure it's getting to the right quarters. But we've also seen that the push for backward integration in a number of sectors, as well as self-sustainability policies of the government, indicate that they are conscious of this fact and they are pushing hard on it. And we can only hope that we're going to begin to see results very soon. To a large extent, we're seeing a number of results in the agricultural sector, because we've seen agriculture pushing seriously hard and driving growth, especially in the second and the third quarter of 2013, and we expect this is going to continue in 2014. So therefore, if we see this kind of effect in other sectors, especially trading and commodities and manufacturing, then we can begin to see that we are heading toward the J side of the curve, and we may be moving positively.
J side, not on many of our viewers will understand what that means.
Normally, like I said earlier, part of the problem we are experiencing with government revenue today includes how much we are losing in revenue from custom, and some of it due to increase in smuggling as a result of levies that has increased in normal import processing. Now, some of these are pains that we have to go through, and this is reflecting on the prices. Some of these things are the part of the pain we're going through, and in the J analysis, it means that Nigerian we're going down a bottom in the J. At some point, we're going to begin to go through the other side of the curve when all of these policies are properly put on ground and domestic production kickstarts on the back of the fact that prices are now competitive and producers are here, producers are producing locally, and government has already supported them with incentive. They can hire people to do it, and competition is now pushing price to a level that is comfortable for every household. That is when we are moving toward the high side of the J.
Okay.
That's what I meant.
Before I let you go, I just want us to comment on the foreign direct investments that the Minister of Foreign Affairs, Professor Vala Omuliri, said that we were able to attract $8 billion last year.
That's a controversial figure. We had as much as that. The figure that is very popular was the figure in 2012, which is factual and released by the World Trade Organization. I'm not aware of the 2013 figure.
Are we supposed to wait for the World Trade Organization or any other figure?
No, I'm not contesting this figure. I'm not contesting the figure because I don't have the fact. But the point I want to point out is to relate to the figure I am aware of and its dynamics, especially the distribution, to make my point. The 2012 figure shows that the larger proportion of this, close to like 70% of this money is in FPI, what we call foreign portfolio investment. And the larger part of this money are in stocks, bond, direct loans to...
Not to the real sector.
Yes, like the remaining 25% are in real sector, in direct investment, really. So it's... And this sector, in this proportion, it is scary that because it constitutes what we call hot monies in the system. Some of the reason why we had this flow was because of the high interest rate environment that we had during the period and now, and we continue to sustain a carry trade opportunity compared to everywhere else in the world where interest rate is near zero in the advanced economy, and you can borrow low and come to Nigeria and invest and earn 12 or 15% yield on return. So this money are chasing. As at the end of 2012, 51.8% of transaction on the Nigerian stock exchange is are done by foreign investors.
Okay.
It's made up of FPI. So even the market is sitting on a little bit of a gunpowder.
Okay.
The same effect in the bond market and money market.
All right.
So
I think
what we would love to see is this shift to move away from more of portfolio based to real investment. Then we can be comfortable that things are.
I think there's a topic that we'll definitely come back to perhaps next week on the show. Thank you so much. That's how much we can take from you.
No problem.
That's been our conversation with Bayo Durodola. He is an economic analyst, and he's been talking about the ability of the government to realize more revenues, what we can do to ensure that we work on that, and of course looking at our foreign direct investment, the latest figure that was actually put out there by the Minister of Foreign Affairs. We'll go on our last break on the show, and when we return, we will be looking at issues that may likely be tabled at Davos Clusters, Switzerland next week at the World Economic Forum.